Welcome, let's get started. When it comes to financial advice, social media platforms like TikTok have become hotbeds for quick tips, bold claims, and sometimes questionable strategies. The rise of personal finance influencers has democratized access to money management ideas, but it's also made it easier for misinformation and downright bad advice to spread. Let's take a closer look at some of the most common types of bad money advice circulating on TikTok, unpack why they're problematic, and consider more thoughtful approaches to managing your finances. First, there's the notorious get-rich-quick mentality. TikTok is teeming with creators promising instant wealth, whether it's flipping NFTs, day trading with no experience, or joining a multi-level marketing scheme. These videos often feature flashy graphics and testimonials of overnight success. While the allure of quick money is understandable, the reality is far less glamorous. Most legitimate financial growth happens slowly, through consistent saving, investing, and learning. Day trading, for instance, is incredibly risky and requires specialized knowledge. The vast majority of amateur traders lose money. Multi-level marketing schemes, meanwhile, thrive on recruiting rather than selling, and the odds of making significant income are slim. If a video claims you can make thousands with little effort and no risk, it's wise to be skeptical. Another common piece of bad advice is the suggestion to never save money, just invest everything. While it's true that investing is a powerful tool for building wealth, it isn't the only pillar of financial health. Emergency funds, savings for short-term goals, and cash reserves are essential. Life is unpredictable. Car repairs, medical emergencies, or sudden job loss can happen to anyone. Without a safety net, you may be forced to sell investments at a loss or take on high-interest debt. The balanced approach is to maintain an emergency fund of 3 to 6 months' living expenses before prioritizing aggressive investing. Then, there's the credit cards are evil, cut them up immediately advice. Some TikTok creators advise viewers to avoid credit cards at all costs, claiming they lead only to debt and financial ruin. While it's true that irresponsible use can result in significant debt and credit damage, credit cards themselves are not inherently bad. When used wisely, paid off in full every month, with spending kept within budget, they can offer perks like cash back, travel rewards, and fraud protection. They're also vital for building a strong credit history, which can lead to better loan terms and opportunities down the line. The key is to use credit cards as tools, not crutches. On the flip side, some influencers encourage viewers to open as many credit cards as possible to hack the system and rack up rewards. This approach, known as credit card churning, can backfire quickly. Opening multiple accounts in a short period can lower your credit score, make managing payments difficult, and lead to overspending. Rewards are valuable only if you're spending money you would have spent anyway, not chasing points with unnecessary purchases. Another problematic trend is the glorification of hustle culture. The belief that working multiple side gigs is the only way to achieve financial success. While having a side hustle can be empowering, especially for paying down debt or saving for a goal, constantly chasing more work can lead to burnout, stress, and a lack of fulfillment. Money is important, but so is balance. Instead of spreading yourself thin, focus on building skills, negotiating for better pay, and creating a financial plan that supports your goals and well-being. Some TikTok videos promote hacking student loans by refusing to pay them or waiting for forgiveness programs to erase the debt. While there are legitimate forgiveness programs for certain professions and federal loans do offer options like income-driven repayment, ignoring your loans is dangerous. Unpaid student loans can lead to wage garnishment, damaged credit, and mounting interest. Instead, research all repayment options, communicate with your loan servicer, and, if you qualify, pursue forgiveness programs through official channels. Another frequent piece of advice is to just buy a house. It's always better than renting. Homeownership can be a great way to build wealth, but it's not always the right choice. Buying a home comes with upfront costs, ongoing maintenance, property taxes, and less flexibility. Renting can be a smart financial move depending on your goals, lifestyle, and local market conditions. The decision should be based on your personal situation, not blanket statements from influencers. Let's not forget the skip your coffee and avocado toast trope. Some creators argue that small daily purchases are the reason you're not wealthy, and cutting them out will make you rich. The math rarely adds up. While being mindful of spending is valuable, financial success is more about the big picture decisions, career growth, investing, housing, debt management, than skipping a latte. It's the larger recurring expenses that have the most impact on your financial life. One of the most dangerous trends is the spread of misinformation about investing in cryptocurrencies and meme stocks. Some TikTokers encourage viewers to put all their savings into volatile assets, claiming it's the fastest way to make money. While crypto and stocks can be part of a diversified portfolio, they're also high risk. Putting all your eggs in one basket is risky, and price swings can wipe out savings overnight. Diversification, patience, and research are key. So, how can you spot bad money advice on TikTok? First, look for the red flags. Promises of guaranteed returns, no-risk opportunities, and advice that ignores your unique financial situation. If an influencer doesn't mention the risks or encourages you to act immediately, pause and do your own research. Check their credentials. Are they a certified financial professional or just someone with a large following? Good advice is nuanced, considers both pros and cons, and encourages you to make informed decisions. Reliable financial advice is grounded in timeless principles. Live below your means, save consistently, invest thoughtfully, manage debt, and protect yourself with insurance and emergency funds. It recognizes that everyone's financial journey is different, shaped by income, goals, responsibilities, and values. Before making big decisions, consult trustworthy sources, books, reputable websites, certified professionals, and take time to understand the options. Ultimately, TikTok can be a fun and inspiring place to learn about money, but it's also a platform where bad advice can spread quickly. By staying curious, questioning bold claims, and focusing on proven strategies, you can make smart financial choices and avoid the pitfalls of viral misinformation. Remember, building wealth is a marathon, not a sprint. Let thoughtful planning, patience, and education be your guide. Thanks for watching. Be sure to like, comment, and subscribe for more.